future, and its name is Marco.
Welcome back, everybody, to another show of Hoot Loot, a Hoot Entertainment production. And this show today, April 23rd, 2022, with me standing in front of the bankrupt U.S. government. This show is called U.S. Insolvency is Here. Beware of the coming reset. And let me tell you this, it ain't going to be pleasant if it happens. I'm going to talk all about it today and the coming ramifications of it, including some new information that we've learned in just the last week. And this will have to be continued the next week because there's so much damn information that we've gathered about, for example, cryptocurrencies. We're not going to talk about them at all today because we buried them last week. And hopefully you will watch that show because those of you that insist on holding on to them have a good chance of losing everything, and we're going to tell you why today. All right. So what I'd like to say is, if you're surprised by the markets right now, you've been watching the show, because ever since the beginning of the year, we've said about 3 things that have come to pass, and we've said them over and over and over. Nobody rings a bell at the top of the market, but ding! All right. And we did on January 7th, January 14th. The market's now down 20%. Which is the definition of a bear market. Bear market! Okay, nobody likes to say bear market. You ever watch CNBC? They never use that word because you can't have a bear market. It's impossible in this country. Nobody can lose any money. Well, some people are going to have to, unfortunately. And, really appreciate all you new subscribers that we're getting. And if you please like and subscribe, we sure as hell appreciate it. Big changes are coming. Please pay attention to what I'm about to tell you, because if you go back through some of the prior shows, including the last 2 or 3 or 4, they have been spot on as to what's been going on. And we told you last week that this was about the end of that bear market rally. Sure enough, 1,000 points down on the Dow on Friday. It looks like it's about to resume, but we'll be back with that in just a minute. So please like and subscribe where the buttons are right here, and we'll be right back. All right, so I'm starting with a brand new chart that we've not shown before, but it's really relevant right now because, if anything, this will put some emphasis on the fact that the U.S. is broke, and we are broke as can be. You probably don't know about it, but if you actually look at the amount of debt that we have, the national debt, it's surpassed $30 trillion now, $30.4 trillion. Now, the reason that the 2-year Treasury note is so important is because the average cost of this $30 trillion in debt is 1.3%. The 2 years already at like 2.8. Okay, so they're going to have to refinance, and all of the stuff that we have, all of the debt outstanding, is on the short end. So it's going to all have to be refinanced, or it's going to have to be basically just forgotten about. We'll see. That may be one possibility. You never know. But right now, even if you just stopped interest rates from going up, our interest expense would double right now. And it's already the 4th largest expense. It's already, we need to surpass defense. If interest rates go up to anything like what the Fed is describing, and they're saying 3.5, it's going to be worse than that because the Fed always sugarcoats everything. So when we start getting to 4 or 5%, which we won't because the economy can't take it, imagine what the interest rate is going to be. The U.S. is bankrupt. We cannot pay our debts, and that is the problem. Right now, even if we took away all debt, we'd still run a $2 trillion annual deficit, and that's just counting it the way the government does. That's not counting it the way a regular human being would, but by those stupid professional politicians that we want to vote the hell out. All right, so on to our next chart here. We've got the American Association of Individual Investors weekly survey as presented by Edward Yardeni in Yardeni Research. Very fine publication that he has. And what you can see here is if you look at the latest bulls and bears, these numbers are really low. In other words, people are really bearish out there. And what that tells me, especially after the 1,000-point down day that we had on Friday, that, sentiment is pretty bearish. And when you have too many people leaning the wrong way in the boat, it tends to tip the other way. So I'd look for a little bit of a bounce this week But that doesn't mean that the bear market is anywhere near over. It just means it's going to take your socks off. And all the earnings reports of the big tech companies are coming this week, and those are going to affect things too. As a matter of fact, a lot of those stocks have declined into those earnings, and some have reported. We're going to show you those too. Those have been just massacred. And the ones that are reporting are huge. So, you know, they've fallen into the earnings report. They may bounce on the earnings report, but we believe that they're just going to continue on lower. And this is about as bearish as you ever see. We have so many people bearish that need to get back and frothy and greedy again, so the market's going to take all those short sellers and knock their heads off. All right, so we're on to the canaries in the coal mine, as I refer to them. These are the sort of the leading edge type of companies. They tend to represent really dumb money, to be honest. They're the hot, dumb, stupid money. And we buried crypto last week. If you haven't seen that, why don't you take a look at last week's show called Cryptocurrencies Rest in Peace. If you can actually watch that entire show and tell me that these things are not a fraud, I'd love to know why not. All right? Because no one seems to want to believe it. And the implications of that are really bad, and we're going to talk about that today. All right, so first thing I'm going to do is talk about Bitcoin. As you can see, this thing is right about to break a bear flag and, continue on its next leg down. Now, one of the things I want to point out, people say, what's a bear flag? What's a bull flag? A bear flag tends to point up. It tends to be ascending. A bull flag tends to be descending, okay? And that's that's the main difference. And we're going to explain that in our College of Charting Knowledge series, which is coming out real soon. So let's go on to the next canary in the coal mine, which is good old Tesla. And, of course, 24/7 is the Elon Musk show, or Felon, as I call him, Elon the Felon. Well, let's see. What do we have this week? Well, first of all, we have the hostile takeover of Twitter at 5420. Where did you come up with that number, huh? Jeez. And he wants to take out the W from Twitter, believe it or not. So he wants to call it, what? Titter? Are you kidding me? What an idiot. Or no, actually, let me be polite. As they say in the South, bless his heart. And since he's in Houston, bless his heart. All right, so here's a guy who basically says he believes in free speech. And that's why he has to buy Twitter, because he cannot speak freely. The problem is he's totally opposed to free speech. He allows no criticism of himself. As a matter of fact, when Bill Gates was talking about shorting the stock or something like that, he had a big cow over that. He wants to say anything he wants and silence anybody that is a critic of him. And that's good old Elon the Felon for you, Mr. Not a Hypocrite himself. Oh, God. And, of course, the company is doing so fabulously, he would lead you to believe, but we're going to show you some evidence that maybe there's some constraints coming up ahead. For one, there's been a number of recalls, okay, number of product recalls, and two, there's a big movement now to stop full auto service driving. In other words, the type of automatic driving that he has bragged about bringing to the market is a failure. It's had tons of accidents. There is now a campaign to Congress to ban it. All right, and poor Elon the Felon, he's got some other problems that are coming up too, but we'll talk about those in a second. Okay, so now what we're looking at now is Dow Jones Utility Average, and the reason I put this in here is not that it's a canary in a coal mine. It is as far as the electric vehicles are concerned, because one of the things we've talked about for weeks and weeks and months is the fact that there's not enough electricity generating capacity in the United States or anywhere else to support all the electronic vehicles. That's number one. Okay, India, for example, today just said 100 of their 173 power plants have run out of coal, or they're very short on coal. That's going on everywhere. So why am I putting this chart in here? Because utilities are basically valued off their dividend yields. They're like bonds that pay a dividend, except they're going up in an environment where interest rates are going up, which is ridiculous. No, it's not, because the cost of electricity is going up. Why do you think that is? Because of people like Elon the Felon and all these EV people and all those crypto knuckleheads that are mining crypto thinking that they are doing the world so much good. Well, they're not, and we're going to show you all about it and what they're going to be stuck with in a minute. Okay, so now the third canary in the coal mine, and this one is looking not good at all. Like, it's called ARC Innovation. And if it wasn't ARC, it'd have a big leak in it, and it'd go glug, 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 and sink. This is the epitome of cool and trendy stocks. Oh, I'm so cool. I own the next best thing. No, you don't. You just lost all your money, you idiot. I'm sorry. I don't mean to say that. But this company, okay, this particular, it's not a company. It's actually an ETF. It's a holding company for the 100 most trendy companies there are, including ones like Tesla. And basically, look at this. You would never have made money in this thing. You know, if someone says that they're holding on to it and they've made money, they've either held it for 20 years, which they haven't, or they're a liar. Most people are telling me they're making money in just about everything. Okay? I'm going to show you that that's impossible. Especially those crypto scammers that hate so damn much. They just tell you, oh gosh, I make 2% a day. Do you have WhatsApp? No, I don't have WhatsApp! I'm so sick and tired of hearing that question. There's a reason that all these people want me to go to WhatsApp. We're going to talk about that next week. Mark Zuckerberg! All right, so that's enough for ARC Innovation. It's made a new low. It's not even bouncing. This is the worst 100 companies I can think of for price appreciation. Maybe one of them will do well, but this is going to require a long period before you ever see a dime in this thing. All right, and finally, this is sort of the new canary. It's Goldman Sachs, which is a premier financial company. Goldman Sachs looks like it is about to roll over. Okay? It's about to roll over. This is the most important financial company there is, and we're going to show you down the road here, the financial sector has gone itself. It is dying. It led the market up, and now it has gasped its last gasp of air. All right. So now we're going to talk a little bit. I know a lot of you are interested in this Dave Inc. and Wells Fargo situation. Well, I got the right here, okay? Right here are some of the charges. Look at that. Dave's Inc., Dave's Inc., Dave's Inc., Dave's Inc., Dave's Inc. All on a few days, and I called Wells Fargo, okay, the morning of when they started doing this. They blocked my card, and they kept letting charges go through. There are charges after the 6th. Okay? When they knew this was fraudulent. And they still know it's fraudulent because all their calls are recorded. Now, if you could look at this right here and tell me that that's not a bunch of fraud, okay, then I don't know what the hell to say. But no jury's going to side with Wells Fargo and Dave's Inc. I can tell you that right now. And I'm coming for you right now. And all the big damn banks are going just down with you. Okay? Are you guys with me or what? Thank you so much. I appreciate your help. And let's see. Let's go on. Okay, so now we're going on to the indices. The Dow Jones Industrial Average, again, 1,000-point loss on Friday. We told you the bear market rally was over last week. Lighten up while you can. Hopefully you have been. If you haven't, look for a bounce this week because we're so oversold to have yet another chance. But you're not going to have that many more of them, and they're going to be at lower and lower prices, okay? So just be used to that. We had what's called an outside day reversal. There was a lot of those in the last week, okay? An outside day reversal occurs when when one day has a narrow range followed by a wider range where it opens low and closes above, or opens above and closes below. Usually, it moves in the direction of the overall market direction. So the Dow Jones had an outside day reversal down. That's further proof it's in a bear market. Now, there are a couple of things we like that have had outside weeks down, and we're going to tell you why that might not be exactly as indicative as it appears in those cases. But the next support in the Dow, as you can see, is all the way around, below 30,000. And I'll tell you this: it breaks 30,000. I don't think it's going to stop there. This thing has a long way to go down. All right, Nasdaq 100. This is the first ding ding, and that was on January 7th. Don't you wish you had sold when I said ding for this? Don't you wish you'd watched? I wish you had too. I've made a lot of those same mistakes that that I'm sure many of you have made. I don't mean to sound like a know-it-all, because believe me, I've made every one of those mistakes multiple times, okay? It takes that to learn not to make them again, okay? You have to suffer from the pain of having your ass kicked in order to learn. That's the only way you learn in the stock market. But, the Nasdaq 100, look at that down day on Friday, huge. It's, this thing, we thought maybe a head and shoulders bottom. I don't think so. This is going to a new low, and it's going to a new low in a hurry. It may bounce a little bit again, as I said, but I don't see this thing actually rallying a whole hell of a lot. It'll be short, it'll be sharp, who knows. And now this is the Nasdaq 100 for 5 years weekly. Notice this one, okay? Now you have a rounded top in red within a rounded top in purple. And the rounded top in purple is more significant because that would project. Now, what we use to do is if you take the top of the rounded, the dome or the rounded top, and you take sort of the horizontal neckline, and you take that distance, it's about 3,500 points, okay? That means that once it breaks that line, the target is 3,500 points lower. We show that a lot in a lot of the charts here and how accurate that can be sometimes. It's a rule of thumb, so I wouldn't, use it as as something that's a law of nature. It's not. It just happens to be a rule of thumb. But what it shows you here is the Nasdaq has a lot of downside potential still remaining. All right, so we're on to the S&P 500. And similarly, in a 5-year, it looks like, again, it's in a head and shoulders or rounded top and very close to breaking down. It had a 100-point down or 105-point down day on Friday. It just doesn't look very good at all. And it doesn't have support for a long way down. So once this thing does break, it's going to go down in earnest. I just watch out for that snapback that's coming from that bearishness. But other than that, this chart looks like really bad. All right, the small caps, another one, bear flag within a bear flag. And if you look at the next support, which is connects the high from a few years ago, this thing also has a long way to go. And the target just so happens to be there. I drew the target in blue. Same methodology. You basically take the distance between the top of the dome and the horizontal line, and that is the expected amount it will move from there. So if it's a saucer bottom, then it will move up that amount. If it's a rounded top, it moves down that amount. And you got to remember that a rounded top is really like throwing a ball in the air. It's a loss of momentum and a curling over and a falling, kind of like when you toss something back. Okay, just make sure when you toss something, you don't toss it into something valuable. All right, so we're going to keep going here. All right, so we're back to the Dow Jones Transportation Average, and this one is also a very indicative average of where commerce is likely to be headed. And it doesn't look good. It looks very ominous. A lot of the key companies have broken down. We showed you some of them last week. We'll just show you a couple this week. But this is not giving good news. Everything is bad news right now. There's almost no good news. So, hold on to your hats here because it's going to get even worse. The U.S. dollar is among one of the weirder things. And what's going on right now is what I want to talk about. And it has to do with currencies. Okay, right now there is something called the World Economic Forum, and we talked about the New World Order recently, and 2 weeks ago, as a matter of fact. And the New World Order is it basically consists of a bunch of elitists that meet in various places. They include like Bill Gates and all kinds of people that are think they know better than everybody else, want to control our lives. And right now there are plans for a digital dollar. All right, cashless society. It's already being tried in China. They have a digital yuan. All right, and we're going to try it here. Now, the thing is, okay, this is the important part right now. A digital dollar is an absolute ticket to slavery. Once you allow a central government to track every transaction you make, which is what a digital dollar would do, they know everything about you. They can stop you from spending money. They can just take it randomly. What are you going to do, sue them? Huh? China's already doing it. You know how friendly China is to their people. And we're going to do it here, too, if certain people have their way. If I have my way, we're going to vote out all the incumbents and make America laugh again so this never happens. The reason might just happen is that no one's going to notice what a digital currency can do because they've been fooled by the Bitcoin hoax. Bitcoin, which is a hoax, which doesn't exist. Watch less. Watch cryptocurrencies. Rest in peace. See if you can argue with it. But basically, it is the reason now I believe Bitcoin even came out in the first place was to soften people up, make them used to the idea of a digital currency. Bitcoin, on the other hand, cannot enslave you. It can just make you go broke, which is what it's going to do. Because once a digital dollar comes out, what do you think what do you think Bitcoins are going to be worth? Or any cryptocurrency for that matter. Bupkis! All right? And this cannot happen. We cannot allow a digital dollar to occur because it will give professional politicians the right to do whatever the hell they want, take away the remaining freedoms that we have left. And there aren't as many as we used to have by a long shot. So vote out all the incumbents, make America laugh again, and this is a reason to do it right here. The digital dollar is basically a ticket to enslave the population. And you know what? Bitcoin and all those cryptocurrencies that sound so fancy schmancy in the future, they're going to make everybody go, oh yeah, sounds like a great idea. It's a great idea until it happens. Trust me. Okay, enough of that preaching. 5-year treasuries, they're breaking out. And we're seeing interest rates go up. And that's another reason why we are going to have some kind of a restructuring, reset, change in the financial system that is going to be, well, let's put it this way. You're not going to benefit from it, unless you take the right steps. And I guarantee it's there to benefit politicians only, but not us. Now, the 5 year's broken out to a new high, and that's basically a 40-year downtrend, okay, 40-year downtrend. Now, one of the reasons that our economy is so screwed up, other than professional politicians, is professional politicians, but when it comes right down to it, even if we didn't have our $30 trillion of national debt, we didn't have it at all. We just said, hey, we're not going to pay it. We'd still have a $2 trillion budget deficit, and our entire national debt didn't even go above that amount of money until sometime in the 80s or 90s. All right? I believe it was in the 90s. We had something like less than $1 trillion in 1980. And all of a sudden it's 30.4 trillion. And it's rising at an exponential rate, and rates are going up. Boy, if that isn't a recipe for a financial collapse, I don't know what the hell is. And part of the reason the dollar's going up, I think, has to do with this reset and has to do with the fact that Europe is slower and stupider than we are, and they're keeping their rates at zero still. We're at least getting them to stupid. They're not even at stupid yet. All right, 10-year Treasury also broken out. And, not much more to say about that except that every single yield across the yield spectrum is broken out. And the 5 to 30 years are all trading at right around 3%. Flat yield curve. It doesn't look good for the economy. That is not a good thing, especially because they have to go higher to offset inflation. Or we have to have an incredible recession or depression to curtail demand. Because right now we have huge demand. We have no supply. Why? Because we have professional politicians. I know you're sick of me saying that, but let's face it, they suck, and they need to be voted out. You and I both know that, don't we?
Yes!
Yeah. Okay. All right, 30-year, that's gone up too, broken out. I'm not going to waste too much time on that. And we're going to get to the only thing that is even a happy bell, okay? And it's only a half a happy bell, and because the day on Friday knocked a lot of stuff down, including gold and silver. Now, one of the things I'm going to say is that the dollar soaring and silver and gold priced in dollars, of course they're going to have the headwind. The fact that they didn't get creamed is fabulous. They should have gotten creamed. They didn't. Now, silver is still relatively holding up, and it too has had, some of these have had downside weeks too. We're going to show you those. But if they're in a long-run bull market, a downside week will not matter because the overall strength is to the upside, and it will overcome a short-term move like that. All right? So silver 5 years, again, there's an outside week for you right there. I'm showing it to you. But it still hasn't broken down below support. I'd wait for it to break down below support before I got too concerned about it. Right now I'm a little, watching it, but, right now, all the inflation coming down the pike it is inevitable that silver and gold and a lot of things are going to continue to go up in price, no matter how hard the powers that be want to fight them. Gold 5 years, it's still looking actually pretty good. I mean, it had a very difficult week, but it's still looking pretty good. It's above its trend line, its accelerated trend line, and even though on a short-term basis it looked, kind of scary, but on a long-term basis, you have to kind of sometimes pull the microscope back a little bit and get the bigger picture, and that's the bigger picture in gold. All right, Barrick Gold is one of the biggest gold companies there is, and yeah, it pulled back a little bit. I'd use these opportunities as buying opportunities. I'm not sure exactly where to tell you because I would have bought them when they broke out, which is what I did. And but right now you'll have a chance to get back in. I'm not sure exactly when that's going to be. I'm not saying do it on Monday because the market has to hold. If it continues to go down, it will break its uptrend too. And if we have really a liquid situation, gold and silver will go down temporarily, and that could happen. So be careful. They're still higher than they were when they broke out, but it might be time to take your money off the table before the table strips every dollar you have off of you, okay? All right, so these are gold and silver miners overall, and what you see here is that they have had, again, an outside day down on Friday, but they're still above where they broke out, and if they exceed that green dotted line, they're off and running. I still am going to hold to the fact that they're going to be off and running, and that really nothing could withstand that shellacking on Friday. That was just a bloodbath everywhere you looked, except for short ETFs and stuff like that. Yo, Mama Gold! Look at that, still doing okay. There's nothing to worry about here. Imam Gold, it's had a nice run. It came back a little bit on a 1,000-point day. I own it. I wouldn't worry too much about it yet. But we are going to watch and be careful that we don't trigger some sell limits and get the hell out, because you got to do that. You got to do that to survive. Don't take the big loss. El Dorado Gold, similarly, it still looks good, still above its trend line, but it's close. So keep an eye out for it. If you own it, be ready to take your money off the table. This is the gold shares ETF called GLD. Now, the reason I put this in is because it had an island top reversal, and that's something I wanted to show you because a lot of what we're going to do today is educational. We're going to show you targets and things like that, and they're pretty good today. An island top reversal is a terrific reversal in that it shows a burst of buying and then a gap up and then a gap down simultaneously or the next day. And usually it is a reversal, especially if it's in a bear market. An island top reversal would be a hell of a reversal. Not in a bull market, though. In a bull market for precious metals, yeah, it's going to settle them down. It's going to stop them for a little while, but not forever. They're going to continue to go higher, I do believe. And also, I would watch for the 180 level on GLD as a stop area. If it goes too much below 180, then I would actually, you might want to take some money off the table at that point. But it depends on how long your horizon is. If your horizon is years, no. If your horizon is, a few weeks, like a swing trader, then yes. Wheat and precious metals is another one. Had a big day down, but still looks good. I mean, there's no reason not to own this yet. It may happen. The CRB Commodities Index, now we're going to talk about inflation, which nobody wants to talk about, but inflation is part of the reason for the reset, part of the reason for the whole problem that we have in the economy. The professional politicians want you to not think about it at all. The people at the World Economic Forum would like you to just do what they say because they are your masters. Bill Gates, I salute you, Bill Gates. You are my master. No, you're not. You're just you look like a turtle, okay? That's what I have to say about you. Oh, God. All right, now this is a company, this is actually an ETF called Goldman Sachs Commodity Index Trust, GSCI. And this is actually an interesting buy. This mimics the CRB. And if you want to buy something that mimics a commodity basket, this is perfect for it. It's still in an uptrend. It means prices are still going up, but watch that it breaks the green line. Okay, but still looks like a pretty good hedge against inflation to me. The Invesco Agriculture Fund is something that, it basically is a bunch of food companies and agriculture companies, and Joe Biden has been so kind as to tell us about the food shortages to come. Thank you, Joe. Now, what I'd like to tell you about is that there are war food shortages coming. Bigger food shortages than Biden would even dare tell you. I don't want to incite a panic, okay? But I do want to urge you to stock up a little bit, at least a little bit of non-perishables. And why am I saying that? Because summer's coming up, it's going to be hot, and if there's any opportunity to trigger a riot, I'm sure that our friends in Washington, D.C. would love to do that with food shortages so they could declare martial law or do something like that and then put us in a cashless society. It's possible. I would think about it very hard right now because right now it scares me to death. And it should scare you to death too. Corn is one of them right here. Not much to say. I'm going to go flip through the commodities really quickly just to show you how bad the foodstuffs are. But they're going to get worse. And part of the reason they're going to get worse, and here's livestock, part of the reason is fertilizer shortage. Global yields per acre are going down by half. Okay, half. And so much is grown in the Ukraine and Russia. They're not even going to be planting this year. Okay, they have all the fertilizer. They don't have all. They have key ingredients in fertilizer we talked about last week. And they can't plant. Okay, they grow a lot of the wheat and stuff like that. They can't even plant. So it's not going to be a good year. Livestock Index, people might not be eating a lot of meat, but the price of it's going up if you are. Soybeans, another food that is in a bull flag or, sort of a continuation pattern. Looks like it's going up too. And I'll go through that. Wheat, we know what's going to happen there, or we believe. Now, let's go on to crude oil and some of the energy type of commodities there are. Okay, now crude oil looks like it's consolidating after a huge spike up. It got up to 130, and this is taking money out of the pockets of basically everybody. It's a wealth transfer from you and me to owners of crude. That's pure and simple what it is. That doesn't mean it's evil. It's evil if you're a professional politician, but it's not evil if you're a business person because that is what you're trying to do. You're trying to produce things that are going to go up in value or sell them for higher than you can produce them for. That's called a business. Even Elizabeth Warren should understand that, Pocahontas. You went to college, you went to law school, supposedly. As a Native American, of course. Maybe they didn't teach it to you. Maybe they don't teach Native Americans, especially phony ones like you, about economics. Clearly they do not. Because all I hear about is windfall profits tax, gas lines, unfair. Yeah, it's unfair because it shows how bad of a job professional politicians have done. Gasoline prices, crude oil prices are the single highest indicator to voters of how bad politicians are. And they're going to do everything in their power, including screw the market up even more to get reelected, because that's what they do. All right, gasoline is, again, another one that, it's just a derivative of crude oil. It looks like it's breaking up too. All right, natural gas is the U.S. market. This has come in a little bit, but if you look at the European market, it's at about $50, okay, as opposed to 6 or 7. 6 or 7, I can't believe this is low here, considering we have all these pipeline problems, and we're starting to liquefy it and send it over to Europe, because Europe has shut off the Russia natural gas pipeline from Gazprom. Yeesh. All right. Cotton. All right, so I'm going to talk about something different today. Clothes are going up in price, but I don't care because I'm wearing my Hoot t-shirt, and we're going to have lots of great products for you soon. I'm not going to talk about them today, but when we have them, we're going to have them next week for sure, okay? And they are awesome, and you can tell the professional politicians exactly what you think of them, all right? Lumber. Everything about housing is going down, and not housing prices quite yet. Maybe they will a little bit. But lumber is starting to rally again, but the housing sector is not at all healthy. We're going to show you more about that. And with rates going up, and believe it or not, 2% rates or 3% mortgage rates or 4%, whatever they are like cutting demand by like 50%. There's no more buyers left for homes, people. That's the problem. Because if 4% drives you away, I know I'm old. I'm as old as the hills. I admit it. I was here when dinosaurs were walking here. Okay, yeah, I had to run awfully fast. Let me tell you that right now. They're big. But I'm going to tell you this right now. This there just aren't enough homes around. And I'll tell you, the real estate's going to be a hell of a good hedge. It was in the 70s when we had this kind of stagflation. Alcoa, now this is kind of interesting and a little change, is why I brought this up. Some of the metal manufacturers that are huge are starting to break down. Look at Alcoa with that huge down move on Friday. And the same thing you can say about Freeport Copper. They're telling us something. You know what they're telling us? Recession, severe one, depression, everything you don't want to hear, everything you're not going to hear on cable news because hopefully you don't watch it, because it's a leading cause of mental illness. As a matter of fact, CNN, the ultimate leading cause of mental illness, had to shut its streaming service down after a month because of all the lawsuits from people going insane by listening to it. So they shut it down for $300 million. I was just kidding about the lawsuits, but trust me, I'm sure somebody will take the opportunity to sue them for mental illness. They should. So anyway, those two are telling us some really bad things about the economy, and so are banks, and the financials are looking crummy. This is another reason why I think the reset's coming, why I think the digital dollar's coming, why I think something is coming down the pipe that you need to be aware of, and I'm going to tell you more next week about it, how to protect yourself from it. I don't think it's happening in a week. Okay, it's happening in the next few months, maybe a year. I don't know exactly when. But I'm going to get more information on it, tell you all about it, because literally it's too complex of a topic to just, to set in the time limit that we have on the show. Banks are going down, okay? This is the bank index. It's in a big rounded top. Oh, that doesn't look good at all, does it? And it's right at support. This is not looking good. All right, broker-dealer index, same thing. It's about to break down. And that means the capital markets are starting to close. There's less liquidity. It's not good. And that's all I got to tell you. And Goldman Sachs had a great year for all of their executives, but a really lousy year for their clients. And I'd encourage you to watch Wall Street Greed Makes Investors Bleed. We just did that show a few weeks ago, and that kind of gives you an inside look at how these guys just, they're not there to help you. They're there to make money. They don't care if you make money or not. Well, maybe they care a little bit, but not a whole hell of a lot. JP Morgan, here's another big one for you, Dow component. Look at that series of lower highs, lower lows, rounded top. It couldn't look worse than this. It looks crummier than hell, and that is probably the most important bank there is, simply because of its size. It's on the Dow and everything. All right, so we're going to talk about B of A, which we haven't talked about in a long time, but it also looks like just the other banks. Yeah, is what I have to say about B of A. And the graph, it just looks like, oh God. And look how far it has to fall potentially. I mean, all of the financial companies look identical. They have these bear flags within a large rounded top, which means a large decline is coming for a long time. And the banking sector is particularly vulnerable, and it's global. It's interconnected. So, believe you me, there's nothing they'd like more than to put a digital dollar not in your hands, because you'll never own it, you'll never touch it, just like Bitcoin. See, that's the thing. Bitcoin's a nothing, and the digital dollar will be a nothing. You'll only believe that you have it because someone can take it from you. That being Uncle Sam, our benefactor, the professional politicians I love so much. All right, Berkshire Hathaway. I've been very complimentary of Warren Buffett recently, and one of the reasons is he's avoided cryptocurrencies. Smart man. There's all this, well, why don't you invest in them? You should. Everybody does. That's exactly why not. Because everybody does. You don't get rich when everybody is doing the same thing you're doing. As a matter of fact, that's the surest recipe for going broke. Okay? As in broke. As in the United States. As in broke. Berkshire Hathaway, unfortunately, looks like it broke down too. I mean, it just can't defy gravity. But this company is so close to its highs, it still is going to be a premier company. And as long as Warren Buffett does smart things like he's been doing recently, this is the kind of company that's not going to kill you. Okay, so now we're on to mega caps, and you're going to see why the Nasdaq is finally, it's finally going. I think oh no, I can't. All right, Apple is probably the best looking company among the mega caps, but it has earnings this week. It's close. We'll see. Okay, now we go on to Alphabet. It's broken down. It has earnings due this week, which is why it might rally. But Alphabet is, look at how far it can go down. This thing can go down another 500 points, even 1,000 points, based on the support that exists. So, that's not looking good. That's one that's rolling over as it's rolled over. Amazon looks like it's about to roll over too. It also has earnings coming out this week. Meta Platforms, God, I hate this company because I can't stand how it's run. Next week, we're not going to talk about it too much this week other than to say it has earnings coming out, and I expect it to fall further, but we'll see. I don't really know. I don't play in this name. But next week, what I'm going to tell you, I'm going to show you how complicit Mark Zuckerberg is in the scams that are constantly going on Facebook, WhatsApp, and Insta-scam, okay? He has to be involved in all of them because he's too much of a control freak and a sociopath to not be. And that makes him very liable for this, and I won't be happy until he is at The Hague being tried for crimes against humanity. That's how bad I think this guy is. He and Dr. Fauci belong together. Calling Dr. Fauci a doctor is such an insult to the medical profession. Microsoft, again, here's a target type of situation for you where we have a rounded top. It dropped 70 points from the peak from 350 to 280. Made a rounded top. It's going to report earnings again soon, and it's likely to decline by at least 70 points. That's our target, plus or minus for this rounded top. The point of the matter is all the big caps are rolling over. They're going to pull everything down with them. It's just beginning. It is just beginning. You think this is over and this is time to buy? Yeah, listen to Jim Cramer. Buy it all up. Okay, be my guest. All right, Netflix. Oh, my God, this one. Netflix now has a 70% off after Christmas sale. Why? They blame it on password sharing. Well, gee, if you raise your prices, people do that kind of stuff. Okay, so if you want to raise your prices, how are people going to react? They're going to react by password sharing. So go right ahead. And they lost customers anyway. So if it didn't matter before, why should it matter now? In other words, they didn't just discover password sharing yesterday. But companies always blame it on the weather. They blame it on inflation. They blame it on Ukraine, Russia. They blame it on anything they can, but their own mismanagement. And that's all there is to it. All right, Nvidia too. And this one also, I put a target on this thing of $80 because look at that rounded top. That rounded top it lost $130. It's already down from 340 to 210, and supposedly semiconductors are in such short supply. Really? If you're in greater supply, we have more EVs out. Would that be any good? No, it wouldn't do any good at all because we wouldn't have the electric power to generate. Okay, and that's that. And Nvidia is the poster child for crypto gaming. It's a great chip, by the way. I have it. It's a great chip. But unfortunately, semis have to go down too. And FedEx is very important because of transportation of goods and services. Not services, but goods. And they've broken down too from a terrible pattern from a 5-year rounded top. This can go way down. It's not looking good at all. And similarly with UPS, it is no longer going up; it's going down. And that's all I got to say right there. The Semiconductor Index. This is basically all of the semiconductor companies weighted by their market caps. And as you can see, this is probably the biggest subsector of the whole Nasdaq 100 when you look at all of them. Because you got Tesla. I mean, not Tesla in there. You've got Nvidia. You've got Qualcomm. You've got Broadcom, you've got a number of huge companies in there. And this has made nothing but lower highs, lower lows, continues to do so, barely bounced, and I expect this to make a lower low. It already has made a lower low, actually. So, again, another sign that things are not good. All right, and home builders are the final chart we have. Home builders, basically, everything home builders looks like crap. Everything. From the home builders themselves, who could sell every house they could build if they could get the materials to do so, okay, to the retailers like Lowe's and Home Depot making brand new Lowe's. So there's nothing about home building that is looking good right now, and it is such an important segment of the economy that you just don't want to see this. And, I just want to say one thing now as we wrap up. that I really have enjoyed, doing all these shows. And please, this one is so important. If we do not succeed and vote out all the incumbents and make America laugh again, which it should, let's throw a party when we throw those bums out. What do you say? Yeah! I think so. All right. Anyway, with that, I want to say thank you very much. Please like and subscribe. Please share this with your friends if you find this of any interest at all, because this is really important to how we live, whether we're free or not, okay? That's how important this is, okay? And I'm going to sit here and talk till I'm blue in the face if I have to get the incumbents out of office. And please join me. Please join this movement. Vote out all the incumbents and make America laugh again. We'll see you next week.